a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankur Periwal from Axis Capital. Thank you, and over to you, sir.
Good evening, friends, and welcome to SUNTV Network Limited's Q4 and FY21 earnings call. As usual, from the management side, we have with us Mr. R. Mahesh Kumar, Managing Director, Mr. S. L. Narayanan, Group CFO, and Mr. V.C. Unnikrishnan, CFO. SL, would you like to add any opening remarks, or should we directly jump into the Q&A?
Yeah, I will take just a few minutes because a very important development has happened during the quarter, which is the Vivad Se Vishwas scheme, which we have availed. So I just need a couple of minutes to put that in perspective because it will preempt a lot of questions. Because that will be of interest to every analyst on the call. Should I start?
Yeah, SL, please go ahead.
Yeah. Good evening, ladies and gentlemen. Many of you are aware about the expensing policy of SUNTV with respect to satellite broadcast rights. We have always charged off the entire amount in full in the books in the year in which it is aired, and that is consistent with the policy that's been adopted with our tax filings as well. And we've had some issues in the past where the tax department had treated these rights as long-lived assets and disputed our claim for full deduction, and it had gone into litigation. And consistently, we've been winning at the appellate authorities, whereby our claim of 100% tax deduction has been upheld. But because the department had gone on appeal to a higher appellate authority, we've been disclosing this as a contingent liability. The Vivad Se Vishwas scheme provided an opportunity for us to settle this and get rid of all the uncertainties and the potential risks of interest in case it goes against us at subsequent appellate stages. So we decided to settle this with the department. So we've got rid of almost 951 crores of contingent liabilities by paying the differential, and as a result of which we've been able to create deferred tax assets of almost 400 crores. The total amount paid was 250 crores, which is for the last 3 assessment years where it is...
from 2003-4 to 19-13.
Yeah, okay. So the net impact is about 38 crores of write-back in provision for taxation, and that has been taken in the quarterly accounts. So that's the only point I just want to mention before we get into the call. Now we can start the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jiten Doshi from Enam Asset Management. Please go ahead.
Good evening, SL and team. Congratulations on a good result in a very challenging environment. I think you all have navigated the environment very well. There was no mention of any further dividends in your press release. So what was the total dividend that you all paid out for the year?
100%. 100%. We paid out 100% for last year.
So have you all changed the dividend policy?
Not made today the board has not made any fresh announcements. I think possibly during the current fiscal they should take a call on it.
So you mean for the last year the dividend paid out is only 5 rupees?
Yes, sir.
Okay. Any reason why there's a sudden change in the dividend distribution policy of the company?
Jiten, actually, we are living through some very tough times, and there is also some rumors of a third wave, potential third wave. So, we just were grappling these issues. I mean, I know you are a great votary for liberal distribution, which we have done in the past, but in the last 12 months, we have seen some extreme volatility in business sentiment. We thought by March everything was over because from December to March we saw a fairly good uptick in the traction for ad revenues. But then suddenly towards the end of the quarter and the beginning of the June quarter, we saw all kinds of, volatility arising out of this second wave. So, primarily because of that, we just want to make sure that the company is in very safe ground. We just want to make sure that, we're getting out of the difficult situation and a firm trajectory is established whereby we can see with some degree of visibility that...
So what is your cash balance today, sir?
About 3,800 crores.
And what are your gross total expenditure of the year, last year?
$1,071 crores, sir.
Sorry?
1,071 crores.
So 1,071 crores is your gross total expenditure, and 3,800 crores is your cash. So are you suggesting that, even if the business has to shut for 3 months, we will need so much of cash?
No, I mean, you have a point, Jiten, but also, the last year has been an exceptional year because we haven't bought...
I understand. Like for all the corporates in India, it has been a very, very exceptional and challenging period. In fact, for some, they've also declared losses, etc. So you're absolutely correct that it's a very, very exceptional period. But why this inconsistency?
No, the thing is, we are also, as you know, we have some major projects which are work in progress. We have 2 films which are work in progress, both with mega stars, and we have...
So what would those projects cost, about 1,000 crores each, or?
I think the 8 movies together will be costing close to 1,200 crores.
So that would be, you have 3,000 and odd crores. It's a 13% payout ratio, which has never happened in the history of this company. Are we trying to also supplement this with a buyback of shares? That would be the only way we can actually distribute free cash, because I remember in the last call, you all clearly mentioned that, the ROE is impacted. And because of the impact of the ROE, you would like to distribute cash, ROI, ROE, etc. because of that. But somehow I think all the numbers are not adding, SL. You have 1,700 crores of expenses. Assume if there is zero revenue.
Then I myself am a very strong votary of improving ROE. But
then how come we were all completely taken aback, because 1,700 crores expenditure in the year, if everybody of you don't produce a single movie, don't get 1 rupee in advertising, people stop paying you for your channels, and there is no subscription revenue, no advertising revenue, no nothing that happens to you that will take care of 1,700 crores. Another 2 movies you optimistically produce as another 1,000 crores. There could have easily been a distribution of 700-800 crores. Unless you feel the next 3 years there is going to be no revenue in the company, and for the next 3 years there is going to be a continuous pandemic, and people are going to be shutting their operations or something of that sort. But does this now translate into rewarding shareholders through a buyback?
Certainly that is something that is there. In fact, I'll be, unfortunately, we cannot speak at this point in time because these are, on a conference call, I certainly don't have the authority to say anything because it's a board decision. But certainly...
Why a 13% payout? This has come as a very rude shock. And in fact, all companies in India have stepped up their payouts. I can give several examples. I know with the limited period of time, I don't want to get into another. I have a list of 30 companies that have increased their payouts because people are looking at the future with jubilancy. And even if the third wave comes, it will come for 2 months. And in that 2 months, you assume zero advertising and zero. Currently, is there some subscription revenue expected in Q1?
Yeah, subscription revenues will come in.
Okay, and is advertising you are expecting zero in April, May, June quarter? If you can guide us, in Q1, are you expecting a decline of 95% or so in the advertisement revenues or so?
I don't know.
So then what is keeping it back? There should be some explanation to shareholders. I think this has come as a very, very, very rude shock. And every time you all are trying to be so unpredictable, and that is the reason the value is getting destroyed. The PE is getting destroyed continuously. I don't know why there is no understanding of shareholder value creation for last 10 years. And since the pandemic is very dangerous, have you cut the commissions of the senior management, the promoters, or have they taken a regular commission?
It remains constant in the last 6 years, 5 years or so.
No, but since there is a pandemic, are you cutting the commissions to zero because the pandemic is there? Are you cutting the commissions to zero?
So as of what we see in the announced results, it is the number which is there about 4 years back, 4 or 5 years back, the same number.
No, I appreciate, but 5 years back there was no pandemic. Last year there was a pandemic. Since you cut the dividend on last year's profit, have you cut the commissions also? That's my question.
No, that's what I told you, sir. We retained the same numbers as in the last 4 years.
But last year was then why is the dividend not been at the last year's level?
I think Ashwin has given an explanation, so we will get back to the board and keep them posted of the concerns which you raised, sir.
It's very disturbing. You see, I don't know sometimes, why are we kind of torturing shareholders with unfortunate kind of a situation? If shareholders are not getting a dividend, then why should the promoters get a commission at the same rate? That's a question that needs to be answered, either at board level or at your level. You are representing the company today. So if the company's shareholders have actually seen this sort of a situation, then, how come the promoters take away all the commissions and we only get 5 rupees dividend? And suddenly the payout ratio becomes 13%. We need a serious explanation, and that cannot be avoided. That cannot be avoided right now that we don't have a response. I think it's a serious issue. It's a challenge that, and I represent all the shareholders today, hundreds of thousands of shareholders in your company. And why this kind of unpredictability? So, in case you are expecting zero revenue, I can understand, but nobody in this country is expecting zero revenue, including Indigo Airlines, whose call I attended. They are, and now it's a corporate governance issue. Because, even Indigo Airlines, and I spoke to Indigo Airlines, Indian Hotels, East India Hotels, all of these people are not predicting zero revenue for the year. They are in the worst impacted industries in India. Airlines, hotels, organized malls. Malls are not saying they'll be shut down. We just spoke to PVR. PVR is saying revenues could be there for the year. They are not expecting complete close down. They are in same industry as you, media, entertainment, exhibition of movies. So, and if you see the future so badly, then why produce any movies? Why produce movies of 1,000 crore rupees, 2 movies, blockbuster movies? If there is no future, there is not going to be any, if there is not going to be broadcasting of the movies, there is not going to be any exhibition of the movies, multiplexes are never going to open because of the next wave, why produce the movies? So something, the message that is coming is very, very controversial. That one side, the promoter takes the commission, the dividend is cut, cash is 3,800 crores, business is as usual. 2 movies are being produced, but multiplexes will run. So what is the message? I mean, can you, SL, explain to us? Because it's very serious, We are very, very disturbed. We have always reposed our faith, and it's a serious issue of corporate governance. So can we have an answer for that, please?
Yeah, Jiten, just.
So please, I think this requires some sort of an explanation. It cannot be just rubbed off on the side.
Certainly, we are not looking at a doomsday scenario. We will continue to.
Last call, you are so confident. You spoke positively.
Yeah. See, we continue to be positive on the business. There's no way that, you can misinterpret the lack of a dividend to a doomsday scenario. This is not an Armageddon.
That's your explanation, that there is a COVID wave, third wave. So hence you cut the dividend because of third wave. You yourself have stated it right now.
No, Jiten, it's not so cut and dried. I mean, there is some, this is a board's prerogative. The board has decided to conserve money at this point in time. Nobody is saying that we are not going to pay dividend or not going to do any buyback.
What sort of board is this? We have to change the board. Are they working in interest of minority shareholders or what? Because at the end of the day, if you have 3,800 crores, was your board aware of the cash balances when they took this call?
So we present the entire portfolio. We analyze everything. There is absolutely nothing that is held back. Everybody knows what we are making even on the portfolio.
Then why should the promoters take the same commission? You please explain. Is the board working for minority or working for promoter?
Please remember that there are some superstar companies which have lost money in all the bloody dud assets. We haven't written off 1 rupee in the treasury, and me and I are proud about this.
We are also very proud of you. There is no question about that. We are not blaming your treasury management. We are proud of you, and I would like to say front of on this call, congratulations for that. But, why deprive shareholders and with the inconsistent policy? That's what my question is. Not about your capabilities. We are proud of you.
Unfortunately, I can't give a forward-looking statement on a conference call like this. It has to come from the board. The board is equally aware of the fact that our return on equity is the pits now. It used to be almost 30% a decade ago. It is now to 21% or something. We don't like it either. But I don't think we've seen a pandemic of the kind that we've seen in the last year or so. I mean, if anything, the management deserves praise because in a pandemic year, we've actually increased PAT. We've de-risked the balance sheet.
We are proud of you. I give your example to corporate India, that SUNTV is one of the most fantastically managed companies. Mr. Narayan, I am proud of you. I give your example on cost cutting, on the way you have accumulated cash and where you have managed working capital. I give your example to every company in corporate India. We are proud of you and Mr. Unni and all of you, Mr. Mahesh and everybody. So please don't mistake me. I take great pride in my association with you. But this is a very serious issue because it is something that cannot be taken very lightly. I'm sorry, but this is very disturbing to the mind. And this is something that it's like a joke.
Let me assure you, till 31st of March 2020, you've seen our distribution ratio. It's only in 2021 it has come down. That is because we've seen a once-in-a-lifetime black swan event. And again, I'm saying that, I don't want to put out a forward-looking statement on a conference call. First of all, I don't even have the authority to say, yes, we are going to do this. But the board is extremely seized of this issue, and they know that, cutting down distribution is seen as an act of bad governance by any corporate board. We are fully aware of the misgivings that you have. So please trust us. We will carry back this message. Let me assure you that our intent is not to deny minority shareholders of their rewards. I think every shareholder's interests are best served when we have a rising top line and a rising bottom line, and run a company which is free of any kind of shenanigans or any kind of, landmines in the balance sheet. So
are we proposing in the current year that because of the pandemic, basically, are we proposing or giving a commitment right now that promoters will not take management will not take the commission of 175 crores of rupees in such a year? Because that line is remaining very normal, whether it's a pandemic, it's a non-pandemic, it's a higher profit, a lower profit.
There is a contract which is sacrosanct. Mr. Maran and Mrs. Maran work on that contract, and it's absolutely as per the statute and the law of the land. And if anything, they have actually foregone additional compensation by voluntarily limiting it to the levels at which it was operating in 2017. So I don't think we need to, get into the legality or the correctness of that arrangement. Suffice it to say that, we have all, doing an honest day's work, and whatever compensation that's due as per contract, let us, get those compensations. But that said, the point that you're raising on the distribution of cash, I completely agree with if I was a minority shareholder, I'd say exactly what you just said. We will carry this feedback, and trust me, it is not our intent to keep the cash. In fact, there is a problem for us managing this kind of liquidity because rates are coming down. We are not able to generate these returns.
Then how do you justify a 13% payout? Something should have been mentioned in the press release. How do you justify it? Because everybody is very disturbed. We are custodians of people's money, just as you are custodians of our money, and have done a great job in managing the treasury, and we are very proud of you. That's just, it's something that you really please need to take back to management and board. It is my request to you, with folded hands in a humble manner, please look into this issue, and please revert in the coming quarter with something as an explanation, or put out a note on why this has happened, and what do you need to do for shareholders. I'll be very, very happy to hear back from all of you. And I wish you once again many congratulations on a very strong performance, to Mahesh, to you, to Unni, to all of you at the Sun TV team, and to Mr. Maran also. But please do take care of what has been mentioned on a very serious note.
Right on. Certainly, sir. Thank you.
Right. Thank you very much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star in one now. The next question is from the line of Dheeraj Dave from Samvad Financial Services LLP. Please go ahead.
Yeah. Good afternoon, sir. Thanks for providing me opportunity. I wanted to understand. So first of all, I second the view expressed by the analyst on the call, the investor who said that despite great growth in profit, we don't find any corresponding increase in dividend. So I second that, and I would suggest you to take that matter. Probably you may call and declare interim dividend if your management agrees. So that's the first part. Second part, we see a major. Hello.
Yeah, go ahead, please. Yeah, please go ahead. We're hearing you.
Second part is why we see a decline in depreciation and amortization expenditure. So standalone it was 232 crore, Q3 FY21 68 crore, and it got increased to 76 crore, but 232 to 76. So what resulted in such 140 crore drop into depreciation charge? If you can explain.
We didn't have too many new movies to put.
Last year there was no incremental movies coming, because of COVID. Even though advances have been paid, no movies got released. So the number of movies which got released during 2020-21 were less, and consequently conversion into a satellite rate also was very limited. So all possibly should happen during the second half of this year.
Limited new content acquisition, so limited depreciation and amortization expenditure, right?
Right.
Yeah. The second point is on the finance cost. While we have 3,000 crore kind of treasury and cash book, we find that finance cost of around 17 crore per annum and this is a 21 crore for full year. So why there was kind of almost like, so if I say 1 crore for every quarter and all of a sudden I find 17 crore jump in Q4. So what was
the interest? This is the interest on the tax provisions that we were carrying as part of the settlement.
Yeah, this is about 15.76 crores is the interest provided during the March quarter in respect of the financial years 17-18 to 19-20.
Okay, so That is interest not on the normal business operation. Thanks.
Yeah, sir, it's a one-time.
It's a one-off exceptional interest.
Okay, fair enough. So that is also explained. Just requesting you what opinion was given by first investor and analyst. Please carry and consider this matter seriously because this hampers minority investors' rights significantly. And wish you all the best.
Thank you.
Thanks for giving me the opportunity.
Thank you.
Thank you. The next question is from the line of Venkatesh Subramanian from Logic Tree. Please go ahead.
Thank you for a good result, sir. It's the same question. It's a continuation of that. While we understand that these things cannot be shared on a Concall or on a public this thing, but this is a absolutely recorded public call which will be also be put up in, as a transcript as well. If there is any shareholder value creation, this thing, it actually makes us wonder if there is cash in the books, sir. We would like to know how this would be communicated from the board, or I think this team is authorized by the board to make certain kind of statements, and then the board ratifies it. So is there a block in not telling us how you intend to create shareholder value, and what could be the timeline for it?
No, actually, this is, I take severe exception to the insinuation that, you're suspecting if there's any cash in the balance sheet. I think that's going a bit too far. Let's not get into that kind of, street level dialogue. So there is a board.
Street level dialogue, basically. Because this is street level for sure, because we are also talking about shareholder. We have been constantly guided that there's going to be value creation, something, and then we don't. So
nothing is carved in stone. The board has decided today that we will conserve cash for the time being. It's not like, we are not going to, a company which doesn't have cash won't settle the past income tax dues and then come out with a new financial statement this year which will get rid of 900 crores of contingent liability.
Yeah. And
so,
on that, I think we are authorized by the board to talk about potential actions going forward, right? So can you give us some guidance?
I don't think any one of us here can, speak out of turn. Whatever decision is taken will be communicated with proper authorization, proper resolution passed in the board. We just don't want to second guess the board. At this point in time, we should stay with the decisions that have been taken a few hours ago. And it's not like, this is the same company that paid out 1,200 crores in FY20. When we decided that, we need to get rid of excess liquidity. So I don't think anybody can fault us for not paying out liberal dividends. It's just that starting March of 2020 to now, we've been through all kinds of volatility in the business environment.
We've seen a drop of 65% ad revenue in the first quarter, which is now for the full year down only to 25%. So every business has gone through strain, so we need to take care of that. And just by not declaring a dividend does not mean that you can make statements like what you expect.
At the end of the day, Deloitte, Askin and Sells are certifying it's not some hole in the wall. It's subject to all kinds of rigorous auditing standards. And certainly we don't like the insinuation that it leads you to wonder if there's any cash in the balance sheet.
These kind of things happens because we have certainly been guiding for a very long time, and suddenly so people express themselves.
The thing is, we'll be guiding a lot of things based on certain expectations. At the end of December quarter and at the start of the March quarter, we were seeing a certain bullishness, and that's been completely, put paid because of the second wave. So that's the reason why we said that let's not rush into anything in a hurry, and let's just take stock, because it's very easy to take knee-jerk decision.
This is not a matter of interest. I think it's an insinuation. I'll use another word for
interest. Are not going to fall if we delay this by a quarter. And that's a decision that we have to respect the decision taken by the collective consensus of the board.
That is a good guidance, sir, because what we are talking about here is, if you're going to say something, you could say that the board will appropriately consider a buyback or a dividend at a later point of time, whatever, you could say that.
In fact, we tested that out. In fact, we have actually, looked at those kind of possibilities. We can't put out anything which is speculative or which is bordering on a conjecture or a forward-looking statement. So communicate to the we are well aware of the fact that our net worth is approaching some 7,000 crores and our PAT is at about 1,500 crores. We are well aware of the implications of this, and we are also equally aware of the fact that there are dwindling opportunities for risk-free investing. I mean, we used to get 6.5%, 7%. Now it is down to 5.5%. So it is going to become a challenge to even manage this kind of portfolio with credit quality becoming scarce and the interest costs trending lower. So we'd rather pay it off to the shareholders, and they can decide what to do with that money. So all those, classical corporate finance theory is completely appreciative of all that logic. But please have belief in us. I mean, we ourselves don't like the kind of bloated stockholder equity that we have, and we will take an appropriate decision. And once the board is approved, we will come back to you and tell you what it is.
Fine. Thank you.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Ankur Periwal. Please go ahead.
Hi, sir. Thank you. So, first question on the overall market share for us, especially both in Tamil and Telugu. I recollect, Mr. Mahesh had mentioned earlier that, we are rejigging the prime time slots as well as the new content being there. So just, your thoughts there, while I appreciate probably, given the structure that we are in, the COVID-led impact on the content side, probably you can also touch on, any challenges that you are facing, if at all, on the content creation side, and how do you look that space, going ahead?
Yeah. So basically on the content, if you look at from a relative share point of view, we are actually improved a couple of percentage points in terms of the relative share of the viewership in Tamil. And we had mentioned in the past, more specific to the prime time fiction slots, in the last 3 quarters, we have improved by close to 4 to 5 percentage points from 37% viewership share to 42% viewership share in April. So though we had a lot of challenges in terms of the original content, but I think once things opened up, we had a couple of launches and we also sort of rejigged the FPC, which is yielding us very good results. So we are hopeful that we will further strengthen our position in the prime time in SUNTV in fiction. In the other markets, like what we had mentioned in the past, we had lined up some big ticket launches, especially on the non-fiction, with some really big names, some superstars in the respective markets. But because of the pandemic, we are not able to, we are all ready to launch, but we're just waiting for the market to open up. So in the next 1 or 2 months, we have lined up some huge launches in Telugu and also in Malayalam. But we are trending very well in Tamil, and even in Kannada market, our overall fiction share has gone up by 36% as compared to what we were in the last 2-3 quarters. So I think we are in the right track. Once the market opens up, our focus is on these 2 markets to gain share.
Sure, sir. That's helpful. And, from a availability of fresh content perspective, given there will be restrictions in terms of, overall production side, how are we placed here versus the rest of the industry?
It differs from market to market. Like there are some markets still the shoots are permitted, so we are going ahead with that. But the only thing is we can't do big ticket shows. Still, outdoor shoots are restricted. We just need to do shoots in-house or in indoor situation. So that's the reason why we're not able to launch big ticket shows. But if you take Tamil as a market, still I think barring one or two slots, I think in all the other shows, I think we are still continuing to provide original content. So maybe we're just waiting for the next couple of weeks, 3 to 4 weeks, to get clarity across all the markets. So I think we will have a better understanding of the whole thing.
Sure, sir. And just one clarification. I think only, sir, we had mentioned earlier on the movie side, wherein we were planning some 5 movies in financial year 22. But earlier in the comments, you did mention around 10 to 12 billion sort of capex on the movie side. But so if you can help some clarification there.
The 4 movies are under production. Shooting has started and at multiple stages. 1 movie is almost nearing completion. A couple of movies we've gone through about 30 to 40%. The 4th movie is just about started. The remaining, what SL said, is what we have signed up and lined up. But I think because of the delay in the first 4 movies being completed and also the present situation of shooting schedules being limited at various points in time, we are yet to take it up. Hopefully, I think second half of this year, we should be starting that.
Sure. So the aggregate spend which you highlighted at around 1,000 or 1,200 crores, that is not only for this year, that is maybe this year plus next year.
It could move on to the next year as well because of the need to push some of the commencement of shooting to the next fiscal.
Sure. And for this fiscal also, this will be more back-ended, subject to how the pandemic plays out.
Exactly. Because again, one is completion of shooting, second is theatrical opening. That's also a concern. So we have to ensure that there is sufficient gap between the 2 movies coming in. So we have to know on that because June has been theaters are not until at least end of June. We don't expect the theaters to come around. So even if the movies are ready, we'll have to look at between the second and the third quarter.
Sure, that's helpful. And sir, lastly, on the advertisement side, any comments, how the market is looking like? Jan, Feb had been relatively better for us, but then again, March onwards, the pandemic impact. How are the local, regional retailers behaving there, and your comments there? Thanks.
So Q4, I think we saw some good traction. Like I think there was very good bounce back which we had witnessed as compared to the first 2 quarters. In fact, our utilization has jumped sharply during this Jan, Feb, March. And we were we're hopeful that maybe the first quarter of this year also will be more or less in par with the previous financial year, which was 19-20. But I think unfortunately because of the second wave, there has been an impact. But it is, I would say, to a limited extent, it is not as bad as what it was last year. But I think we just have to wait and see because I think whether if the overall the wave comes down, I think we could see some good traction in Q2.
Great, sir. That's it from my side. I'll get back into the queue. Aisha, you can take up the other question, please.
Thank you. The next question is from the line of Mohit Kumra from Kumra Investment Company. Please go ahead.
Yeah, hi. Good evening, sir. I wanted a little more color on this whole tax issue. You said that you had 950 crores of tax pending, which you settled for 250 crores, right?
Yeah, that's because, see, as the years go by, even the department's contention, it would be completed. So it's only the last few years thing which will impact. So that's why, just the payment of 250 crores was required to, complete this.
And now there's a deferred tax assets of 338 crores on your balance sheet now, right?
Yeah, it has created a deferred tax asset of about 400 crores.
411 crores.
How 400 is 338?
411.95 crores is the deferred tax asset created as a result of opting to the scheme.
And you pay an average of 1,500 crores in taxes every year?
Sorry, can you be a bit louder?
You pay an average of 1,500 crores in taxes, right? Roundabout-ish.
No. I think our average tax it will be around 500 odd crores.
Yearly.
Yearly.
Okay, I'm so sorry. 500 odd crores. So so you have a whole year's worth of taxes as assets now.
You're not audible, my friend.
Hello?
Can you be a bit louder?
Can you hear me?
Yeah, this is better. Much better.
Hello?
Yeah. No, again, we're not able to hear you. I think earlier it was fine. I think.
Okay, so I just wanted to understand that now you have a whole year's worth of tax assets on your balance sheet now.
Sorry, we didn't follow. We couldn't understand.
Asking whether we have a full year 411 crores of the first tax credit is equivalent to 1 full year of income tax outgo for the company.
Yeah, more or less.
Exactly.
Yeah, correct.
But it will accrue to us over a period of time. It is not going to happen immediately in the next financial year. This is the benefit which will accrue over a period of time as and when we start claiming depreciation on the movie assets.
Okay, accordingly. And how long should this take? This is what I want to understand.
That depends on the number of movies we buy.
It is on a WDV methodology prescribed by the income tax, which is at 25% every year. So the cumulative depreciation is around 1,600 crores. So every year, 25% of that is eligible for the tax benefit.
Okay. Thank you so much. Yeah. Thanks.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. First one on content. You are looking to significantly ramp up the content investment, investing in non-fiction shows, OTT originals, movies. So what can we expect in FY22? And if you can share some thoughts on how we should be looking at ex-IPL margins.
Kunal, I really wished I had a crystal ball. At this point in time, we are looking at too many moving parts. Some places we are still struggling to shoot, like Kerala and all had an extremely rigorous lockdown. And in some parts of Telangana, there were some issues. And we thought we were able to get all the approvals and we started something on shoots for the movies. And again, that got into a bit of a... So I think Mahesh can give you a better color than...
Yeah, so like I mentioned in a couple of minutes back, I think we have lined up some really big ticket shows which we were supposed to launch during the Q1. But because of this lockdown, it got postponed. But otherwise, it is not that we are going to restart the whole thing. We are almost ready. We have finalized the star. We have signed contracts with them. Commercial or frozen production houses are in place. Only thing is, if the COVID situation improves, if market opens up, I think we should have a very quick turnaround time in terms of launching these shows. And so which will help us and facilitate us to improve the overall positioning in the market. And on the back of it also, we have lined up at least 6 to 8 fiction shows which will ride on this, big ticket non-fiction shows. So everything is sort of ready. It is not at a drawing board stage. It is all finalized, and only thing is the market has to open up. So we're just waiting for that to happen. So specifically, if you ask me in terms of the cost, I would say in terms of the content cost, it should be more or less slightly marginally higher than what we had spent in 1920, considering all these big ticket launches. So this year could be an exception because literally majority of the last financial year has gone in lockdown. So there has been not much of shoots happening. There are a lot of repeat of content which has happened. But that could not be the reference or benchmark. I think if you take 1920 as a year, there could be definitely increase in the content spend as compared to what it was in 1920.
Sure. That's helpful. On OTT originals, when do we start seeing some spending? Like you've been talking about 150, 200 crore amount for quite some time, but we haven't seen really any large spending so far. So can we expect something in FY22?
I think we should be able to answer this with greater clarity by next quarter call, because I don't think at this point in time we are able to get anything going because of so many dislocations. Because the first priority is to get rid of the backlog in the movies, which incidentally will also boost our content library on the OTT, because we are seeing that every time we put a new movie on Sunnext, it drives up subscriptions immediately. So at the current stage, all our focus is on movies. But we are in dialogue with a lot of potential producers for web series originals, but I don't think we're going to start anything before second quarter of this year.
Okay. And any numbers you can provide for Sunnext, revenue, cost, customer base, active users, anything which you can provide on Sunnext?
So I think in terms of the, MAUs, we are seeing some very good growth over a period of time. So I don't want to give you the exact number, but we can say that it has grown by at least 40-50% over the last 6 months. And we have also tried at least 3 small-time movie releases, which we had actually premiered first in Sunnext and then only on television without theatrical. That has been pretty much a very good success for us. So that's a model which probably we might also recreate over a period of time. So otherwise, like what we are seeing in the other broadcasting groups, we are anyway having some big ticket movies which are likely to come. So these are 2 things which probably we might do at least in the foreseeable future. But in terms of the overall downloads, we are seeing some good traction in Sunnext.
Okay. Just a feedback, the other listed broadcaster does provide a few numbers, so it will be good if you can also start providing at least like some numbers. But anyway, and lastly, just a bookkeeping question.
Kunal, this is we've agonized over this early internally. See, at this point in time, if you put granular details for Sunnext, because since Sunnext largely uses content which is expensed in the linear broadcast business, we will be showing some outrageously high margins which you don't want to do now. Because the cost of sales is practically negligible, barring these small-time movies that we have produced, especially for OTT. So let's get to a stage where we are actually creating web series originals which can then provide a set of credible P&L, because at this point in time, Sunnext is basically riding on the content which has been created by SUNTV, and it's basically using recycled content with almost zero cost of sales. So we don't want to start reporting on that basis at this point in time. Let's start investing into OTT, and then we will start providing these numbers.
Sure. Lastly, the revenue breakup and depreciation amortization, last question from my side, if you can.
Yeah. Advertisement is 315 crores. Broadcast revenue is 2 crores. International revenue is 36 crores. Pay channel revenue is 210. DTH is 218. Others is 1 crore. In terms of depreciation on 28 crores and amortization around 49 crores.
Great. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Just couple of questions. Firstly, in terms of ad revenue, so obviously there is some hit in the Q1, but how do you expect the full year FY22? Can we reach the level of FY20 in FY22?
So it all depends on, like I said, basically I think we were trending very well. That was reflected in the numbers in Q4. We are hopeful that this year more or less we will be in par with 1920, but I think this second wave has hit us. We really don't know how long this is going to last and whether there is going to be a third wave. We have no idea, so we just don't want to guide. But the way things look like as of now, I think our endeavor is to at least reach the levels of 1920 in terms of answers.
Okay. And just one last thing. You just provided the Q4 revenue breakup. Can you give the same breakup for the full year FY21?
Let's go to, I'll just give it in a minute. Maybe the next person can come in. So I'll just come back.
Yeah, thanks.
Thank you. The next question is from the line of Yogesh from BNK Securities. Please go ahead. Yogesh, your line is in talk mode. Please go ahead.
Yeah, thanks a lot for the opportunity. Sir, we have seen the South market, Tamil and Telugu. We have seen several movie releases and quite a few of them did well as well. Something like Master, Vakil Saab, Upenna, Robert, Crack, Jati, Ratnalu, all these kind of movies, about more than 40-50 crores collections. Now, if I look at who have bought the digital rights, and we see a lot of Amazon Prime Video, Netflix, and some other. So why we are not seeing Sunnext acquiring rights more aggressively? So there was a paucity of the content investment opportunities during last year, but these were the opportunities which were there in the market. And also we said that whenever we show new movies, there has been a corresponding increase in the views or viewership or the subscriptions. So why we are not aggressive on acquiring the movie rights? I understand some of them we are producing ourselves, but even from the other producers. So that's my question.
Yeah, see, it's perhaps not the wisest thing to bid outrageous sums of money, because we know some of our competitors who bought rights exclusively for a streaming release have actually burnt their fingers. I don't want to name names, but it's very easy to get into a bidding game and have what's called the winner's curse. We just don't want to do that, because end of the day, if I can use my existing content and still deliver reasonable results, and in a pandemic year actually almost reach the same profits as I have did in FY20, I think we've done a decent job. Instead of just frittering away resources on opportunities which are suboptimal. I think it's best to get into these things when a state of normalcy returns. And in the meantime, do some cherry picking on really, like what Mr. Mahesh said, on some of these big banners, some of the really innovative shows that we've been able to get through association with some very reputed international producers. So those are the kind of opportunities which we are working on, under the radar. And once those are done and we are launched, the whole industry is going to sit up and take notice. We have prided on our ability to stay away from this very wasteful bidding games. Even in the past, some of the blockbuster banners, we have walked away when we found that the asking price was too much. Because at the end of the day, every content investment has to answer certain basic financial criteria. It's very easy to put some outrageous sums of money and win the bidding for satellite rights and streaming rights. But at the end of the day, if it doesn't make any meaningful financial return, it's money down the drain. So, and in a time like this, it is better to be safe than sorry. And since we already have a treasure trove of content, which we have reused, which is why, even though our amortization numbers have fallen, we've still grown our ad revenues by 8-9%, which is not a bad thing at all. And our subscription revenues have in this year also grown by about 11%. So the focus is on conserving money, making sure that you run a tight balance sheet and put some decent returns on invested capital. And there's always the time to go into an aggressive mode and acquire a lot of these assets when times get back to normal, where there is also plentiful supply of new content.
So, sir, just a thought on this. I understand where you're coming from, and maybe in the hindsight, we might be right in terms of this investment not generating enough returns. But don't we see this kind of content investment as an insurance that we don't cede any ground to a player who is trying to make inroads into the market? So at least from a tactical perspective, maybe we could step up the investments just to ring-fence our position. So we have a very strong operator in the television business, so we want to replicate similar position.
No, actually, you know what? This is something which we run into very often. A few years back, I mean, again, I won't want to name names. A very reputed banner was available, and we walked away from it. And a rival bought it, and after buying that asset, for the next several months, they didn't show up in the market at all because they wasted all their ammo on a blockbuster banner. And once you wasted all your resources, the entire budget on one or two trophy banners, the market then becomes wide open for others to come and take advantage of the lack of interest. So it's a very smart game that needs to be played with a lot of care. And I think we've done a decent job in terms of identifying which one to go after and which one to leave.
So just to add to what Estelle is saying, it's not that we have not picked up some big titles. Like, for example, in Telugu, we have this Ala Vaikuntapuram, which is a super duper hit. But I am saying that, like what Estelle said, I think we know what is the right value. We just don't want to get into a bidding game and increase the benchmark prices, which will ultimately hit us very badly. So I think we just stay away from that. But I think if you look at the big titles of the South, I think it's 90% of the titles are with us for satellite. And whenever we find the right value for digital, we also take digital rights. It's not that we are not in the game. We are in the game, but we know what is the price. But we know that some of the other guys are paying some outrageous money for which there is no value to it.
Okay, fair enough. I will leave it at that. My second question is regarding the subscription revenue. So we have grown by about 10%, I guess, for the full year. So what's the outlook on FY 22-23? Any ballpark or any sort of indicative number could be useful?
We should continue with the double-digit growth. That business is looking good because we get to see the traction in a group company which is associated with the Sun Group. So going by the numbers that we are seeing in terms of their own acquisition plans for set-top boxes and all that, I can say with some confidence that we'll continue to grow at double digit.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions.
One second. I think somebody wanted the breakup of revenues for the full year. I'll just run through it. Advertisement revenue is 994 crores. Broadcast revenue is about 4 crores. International was about 140 crores. Pay channel revenue is 831 crores. DTH is 891 crores. IPL is 255 and others about 2 crores.
The next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. Just a couple of quick questions. First one is, this 1,100 crores that you talked about in terms of, that will be movie production, right? So what will be the capex that you think, you'll need for the current year for satellite rights, procurement of satellite rights for regional movies?
Jay, you're not really audible, man. Slightly louder.
Okay, let me repeat. What is your budget for procurement of satellite rights of movies for FY22?
I think given the present trend, possibly it should be in the range of around 200 to 250 crores.
Understood.
So
So
the
this 200 250 and
first quarter has been a dampener. We do not know how quickly the theaters will restart in the second quarter. So hopefully majority should, assuming there is no other third wave or major impact of the third wave, second half should be better. So we're looking at a lower number of around 200 to 250 crores for the full fiscal.
Correct. And, the big budget shows that Mahesh was referring to earlier. Can you give us some color in terms of, our understanding is that a regular show production cost for a regular Tamil show, fiction show, maybe about 2.5 lakh rupees per episode. So there's the shows that you are looking forward to, which you think will, help the viewership. What is the extent of sort of, investments that you're likely to make in terms of, will it be 50% higher production cost than your regular shows? Will it be similar cost or to 2x? Some color in terms of, what will be the quantum of it?
This is not actually the fiction shows. We are looking at some international format non-fiction shows. So I think fiction, we are even if you want to really up the quality and give some really fantastic product, I think maybe there could be a 30-40% increase in the cost. But this impact non-fiction shows, which are basically having some limited number of sort of episodes, it could be 40 to 50 episodes. So that's what I think we have contemplated and we have planned. So that will be approximately in one market, it could be around 20-25 crores is a total investment, which will spread over 3 to 4 months.
And so one show, you will spend 25 crores over a 4-month period.
Yes.
And how many such shows have you planned?
No, we are in the process of launching something in Telugu market and one show in Malayalam actually.
And nothing in the Tamil market?
Tamil, I think we are pretty much tracking well on the fiction. Like I said, I think we have improved our overall market share in the prime time because we have done some complete rejig and we have already taken some steps to improve quality and also the overall narrative of the storytelling. So I think we are on the right track now. So our prime time viewership share has improved from 37% to 42%. Our endeavor is always to somehow come close to 50%. So we have plans in place, and I think we are tracking pretty much well on Tamil. So it doesn't need some really big ticket investments by way of.
I understand. I appreciate that, Mahesh, but I feel it's about time that you have a show that kind of is in the same bracket as Bigg Boss Tamil. I don't think on the non-fiction side, your current sort of slate has that kind of content which creates.
Yeah, I know. So I think we have been contemplating, we have done a lot of research on this. Like we have also taken reference of, how channels have turned around in other markets. So that's why I think I don't want to give too much of details now. But I think what we are doing now for Tamil, we are pretty confident that I think that will give us improvement, or definitely it will sustain and grow further. So I understand that they're coming, but it differs from market to market, and so it is not necessary that SUNTV should launch a Bigg Boss. So because the profiling of audience is very different for Sun. So I think you will see some improvements happening in the viewership of Sun over the next couple of quarters.
Right. So to summarize, there are two big shows, one in Telugu, one in Malayalam, which will probably either you would invest 20-25 crore per show for a limited time, non-fiction show. And in addition, there will be some more fiction shows, because your overall number you talked about some 6 or 7 shows, right? That.
Yeah. So that is
like regular replacement of existing fiction shows with some new shows. Is that right way to think about it? Okay. And on subscription, domestic subscription revenue, did I hear it correctly that the guidance for FY22 is double-digit growth? Are you guiding for a double-digit growth? Because there is some uncertainty around NTO2, so just wanted to make sure if I heard it correctly.
No, I think we should still grow because we see enough visibility on that side.
Okay. So a double-digit growth, right?
Yeah.
Okay. Thank you so much. Good luck with the current.
Thank you.
Thank you. The next question is from the line of Arun Prasad from Spark Capital. Please go ahead.
Thank you. So my question is on the recent event that happened at Sun Direct. I know it's not a direct subsidiary, but they have there is an increase in the base pack of the most of the Tamil value packs of the Sun Direct. So any views how this will have any possibility that some kind of an ARPU improvement for SUNTV out of this event?
No. That is independent. See, that's a normal growth in the overall ARPU which Sun Direct has taken. It has got no impact because we are all governed by the regulatory framework. So we just cannot randomly increase price. So Sun Direct is paying as per the MRP which SUNTV is eligible to charge.
Right. So as a follow-up to that, is there any low-hanging fruit still left in the distribution side? And it can keep. You said there is a 20% is the possible growth in the subscription, but what is the driver for that? You said, of course, ARPU is, as you said, driven mostly by regulatory constraints. But from where this 20% is about to come? What is going to drive this, sir? If you can throw some light on this, it will be helpful.
I think the growth primarily is driven by the growth of the overall, conversion from analog to digital in Tamil Nadu market, which we have been, talking for quite some time. And like what SL said, I think we have seen some very decent growth in the DTH numbers in South. So I think these are the two key drivers in our view.
All right. Thank you.
Thank you. That was the last question. I would now like to hand the conference over to the management for closing comments.
Okay, thanks everybody for dialing in. We remain committed to enhancing shareholder value and we count on your support. Thank you.
Thank you.